Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 3rd of April 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. Not the busiest session, on the global foreign exchanges ever. Nonetheless, there are still some key points to flag. First of all, a resurgent pound sterling up by 0.32% against the US dollar to trade at 131.41 shortly before we recorded the video. Moving in the other direction, however, the New Zealand dollar down by 0.38% against the US dollar and trading at 0.6778 shortly before we went live with the video. The dollar is also making gains against the Mexican peso, taking 0.19% off of its near neighbour. Dollar index for its part pretty much unchanged on the session, though down in a modest way for choice, down by 0.05%. The dollar was also on the front foot against the South African rand yesterday, adding 0.15% to its recent gains. Also just want to flag that the cryptocurrencies are still pretty active and moving upwards. Bitcoin and Ether both hanging on to their gains yesterday, and in fact Ethereum has added to its gains over the last 24 hours to be up by 18.63%, and the weekly and monthly tallies are also rising, so there is some momentum to the upside there in those cryptocurrency assets. Okay then, what's on the calendar? Events that may move the markets today. A pretty compact calendar, nonetheless one that's filled with promise. We've already had retail sales and trade balance data for February out of Australia, and we'll look at that trade balance data in a little bit more detail momentarily. We've also had Caixin Services PMI data from China for the month of March, and again we'll take a closer look at that a little later on in the video. To come at 8 AM, we're in Europe for the market PMI composite data for the month of March, and that's accompanied by retail sales from the Eurozone for February, so a chance to see how the European economy is performing top and bottom. We'll also have at 9:30 services PMI data for March out of the UK, and then we pause until 12:15 GMT, crossing over the Atlantic for the ADP employment change data for March. This private sector read on job creation in the US takes on extra significance, I should say, of course, ahead of Friday's non-farm payrolls data. At 12:30 we have the first of the day's central bank speeches, and this one from the Fed's Bostic. And then at 13:45 we will have services and composite PMI data out of the USA for the month of March, and that'll be followed at 1400 by the ISM non-manufacturing PMI read as well, and also that one for the month of March. A pause then until 2100 this evening, and our second central banker speech, this from the Fed's Neil Kashkari, and to round off proceedings at 2350, look at foreign investment in Japanese stocks over the week of March 29th. Okay then, breaking news and comments caught my eye overnight. First of all, China's March services PMI jumps to a 14-month high of 54.4, up from the read of 51.1 in February, and well ahead of forecasts of 52.3. Meanwhile, the composite PMI hit a 9-month high of 52.9 on the back of those numbers, so all three measures of PMIs in China have outperformed expectations over the course of this week. Australian exports have hit record highs with a value of Australian dollars 39.83 billion for the month of February. Exports of metal ores, minerals and services all grew well. The FT has reported that the US and China are closing in on a trade deal, and talks are due to resume again today in Washington, DC. Speaking of talking, UK PM Theresa May wants to sit down with opposition leaders to try and forge a consensus over Brexit and avoid a no-deal scenario. That may be too little too late, but let's see what the next few days can bring. Okay then, food for thought and something to take away with you into the trading day and beyond. We've seen some better news this morning and this week indeed from the likes of China and the Australian economy. However, global manufacturing as a sector remains under pressure despite those better tidings, as these two charts show. The first chart here plots global manufacturing output and global manufacturing PMI. The output in grey and PMI readings in this green line, and as you can see, both output and industrial activity have been falling sharply through 2018 and into 2019, and are testing now at contraction or even below contraction levels. Perhaps more worryingly still, a chart here to the right hand side shows global manufacturing PMIs in green, but the percentage of countries whose manufacturing PMI is stable or expanding is shown in yellow, and that's that line that's of a concern, because just look how rapidly that has been falling, particularly into 2019. So we're not out of the woods yet, and these are the kind of metrics that we'll need to watch closely going forward to determine if we have seen the bottom or whether a further slowing in the global economy is to come. Okay, it's risk warning time. Please do take the time to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and as I say, do take the time to read this risk warning thoroughly. Thank you very much for your time today.